Welcome back to Insurance Mantra. It's time now for our Expert Speak segment. Joining me today is Raj Kumar, former Managing Director of LIC. With his rich experience in the life insurance industry, he will share his expert perspective on the big opportunities and challenges shaping India's insurance landscape. Mr. Raj Kumar, welcome to Insurance Mantra. Thank you so much for joining our show and coming to our studio, sir.
Thank you, Nagji.
Sir, to begin with, I just want to highlight a recent report on India's population that is estimated to reach around 147 crore by next year, and it's a report of UN demographic report, which also adds that total fertility rate has declined and falling below the replacement level of 2.1. So according to you, how this will also have impact on life insurance industry or insurance industry also?
Nagji, you are right. There is a report that the India in India the TFR is already 2.1. A recent Times of India report says so. That means we are already reaching the replacement level of fertility, and there are 4 states, particularly UP, Bihar, Chhattisgarh, Jharkhand, and Madhya Pradesh, where it is more than 2.1. Once these states also reach that level, the population will stabilize, and maybe after 20-25 years, it will start declining. Now, the impact is both economical as well as on the issue of development, personal as well as of the country. Once the population start declining, it means more resources will be available per capita. So the living standards will go up, but at the same time, it will have implications for the industry. The consumption levels will come down. Now, for the life insurance industry, the biggest impact is that on the social security. The population, aging population will be more, and people need to have a pension policies, because in the organized as well as in unorganized sector, there is no social security. Barring government jobs, where also the new pension scheme is there or the OPS is there. So the general public need to have pension policies or the annuities. Also, the health cover costs are going up. So my firm belief is that the health insurance will have a big push up. The regulator, the insurance companies are working towards it, and definitely they will bring very innovative products. The third piece, the new generation, which want to have eggs into different baskets.
Okay.
So whatever disposable income is, they want to put in the mutual funds, they want to put in, say, the banks, they want to put in life insurance. So the term insurance will become more and more popular. It does not mean that the flavor for endowment kind of products or money back kind of products will come down. There is a definite segment which looks at a return of on the premiums which they have paid. So they are conscious about that. So they will go for endowment and money back kind of products, but the new generation will go for the term products. So insurance companies
New generation will go for term product, but sir, you worked with LIC for around 40 years. But when we check the status of term insurance share in LIC, it's almost less than a 1%. So, and LIC being a market leader, when we talk about the insurance, life insurance, people say it's a LIC only, means there is a understanding that life insurance means LIC only. So what was the reason that term insurance did not get that much of traction and now it will get?
Anuragji, it's not like that. In 93-94, LIC brought a policy which was purely a term insurance policy. We had earlier also. That policy has actually restriction that sum assured was limited to 3 lakhs. It was sold in very large numbers. Almost, I think, 1 crore policies were sold in that year. So LIC was having these kind of policies, but yes, there was a definitive push coming from the market as well as from the distributors to go for selling of more of endowment as well as money back plans. But as the preferences are shifting, so I am looking at that, I mean, when we are talking to a younger generation, Gen Z, they talk about term insurance only. So term insurance will gain popularity in future. Its market share will go up. LIC has also come out with the new plans, and other insurers also. But the differentiator will be the innovation.
Innovation.
Differentiator will be the innovation.
And companies like LIC is also doing innovation. We talk about that LIC may enter into health insurance also, because LIC has a 15 lakh agents. Being part of LIC for so long, do you think it's proper for LIC to enter into health insurance also? Because when the name is LIC, and which means Life Insurance Corporation, and you will offer health insurance also.
Anuragji, LIC was having, there were two kind of health products. One was offered by the health companies or general insurance companies and life insurance company. The fixed benefit products were being offered by the life insurance companies, and the indemnity kind of products were being issued by the health insurers as well as the general insurance companies in term like Mediclaim. But now I think the time has come to have a separate vertical for the health insurance, and LIC, as far as I know, is pursuing it very vigorously. They already in talk with certain companies for acquiring majority share. So the health, actually this segment is totally underrepresented. It need to go up. Government has also brought out certain plans where they are covering up to 5 lakhs, certain states are covering up to 10 lakhs also. But that this is not adequate looking at the actual cost of medical care, which is presently very, very high. So this is a segment actually which should flourish in the future.
Oh, health insurance will flourish a lot in future. So you just said that LIC is exploring options to acquire an insurance company. But why it is required? LIC has such a strong network, presence in all the districts of the country, 15 lakh agents, everything is there. Then also, do you think the LIC required to acquire an insurance company?
No, you see, that gives a head-on advantage because established system is there. The networking of hospitals already, LIC also had that kind of thing, but it becomes a synergy. When you acquire a existing player or you acquire a majority stake in some company and you go ahead with this kind of venture, it gives an advantage. Although LIC can do it at its own also, but that will have a long gestation period.
Okay, sir. So one question I would like to take, it's a question from Ankit. He has sent from Jaipur. He is saying that I have a LIC policy, Jeevan Anand. I have already paid a premium for 12 years and 10 more years are remaining. Do I need to continue this policy or take out, surrender this policy and put the money in mutual fund?
No, my advice would be to continue with the policy. You see, 12 years back, he has taken a policy. The premium remains fixed for the next 10 years also. 22 years, the premium remains fixed. But the income levels must have gone up. Yeah. So the disposable income which has gone up can be transferred to the mutual fund. Mutual fund and life insurance are complementary products. They are not competing products.
Okay.
Both serve different kind of, you see, in mutual fund also, it's subject to market risks. Although the mutual fund industry, I was also a CEO of LIC mutual fund, we take care of the customers' needs and try to give good returns. But at the same time, the safety, the economic safety of the family is covered through the life insurance product. So he should continue with the Jeevan Anand is a very, very good policy. Very, very good.
Okay, should continue.
Yes.
Another question we have from Vaibhav. He has sent his question from Delhi. He is asking that his 25-year-old started earning recently after his job. So to begin with, he should go for insurance policy first, or should start investing in a mutual fund, or in insurance policy also should go for a term insurance or for endowment policy?
I will recommend that since he is in the beginning of the career, he should have both a term insurance policy and investment in the mutual funds. It is up to the appetite, what kind of appetite he is having. If he thinks that he need to have a endowment policy, he can think of that after say 5 to 10 years when the income will go up and the disposable income will be higher. Presently, he should go up for a term insurance product, and the balance money can be put in mutual fund.
Okay, balance money can be put in mutual fund. Sir, for our viewers' understanding, that endowment policy can be substituted with a term insurance and a mutual fund?
No, I mean, I'm not saying substitute, it's the choice. As I said, in the rural areas or the middle income groups or the higher middle income groups, the tendency is to see that whatever they are paying as a premium, they should get some return. So the preference is either go for money back kind of policy, which periodically gives you some money, 15 to 25%, which can handle their needs, economic needs in future, or the endowment kind of products. But for a younger person who is in the beginning of the career, I will recommend that a person should go for term insurance and later on think of endowment also.
Okay. So on social media, we keep seeing lot of backlash for LIC policies, that LIC has not given returns in last 10, 12, 15 years. In comparison, the same amount, if somebody has invested in mutual fund, their returns would have been much better. So how do you counter these allegations?
Anuragji, it's like comparing apples with the guavas. It's not possible. Both products have their own benefits. The mutual funds are purely investment products, while the insurance policies cover the economic loss, unfortunately, if something goes wrong. I mean, death happens. Yes. Now, somebody pays, say, 1 lakh rupees premium and gets covered for, say, 1 crore of endowment policy. I'm talking about endowment policy. And something happens, say, within 1 year or 2 years, the family is going to get 1 crore rupees. Yes, yes. But not in mutual fund. Mutual fund, it will be value of total number of units multiplied by the NAV. So these are two different kind of products. One is mental peace of mind. The other is the economic growth, which happens to the mutual fund. So both are different products. And to me, both are required to be in the basket of everybody's investment.
Okay, both are required to be in basket of investment. Thank you so much, sir. We are running short of time.
I know.
Thank you so much for sharing your views and insights. So that's it for this week's Insurance Mantra. But before we go, here is our insurance basic. Did you know? As per IRDA rule, insurers must settle or reject a death claim within 30 days of receiving the last required document. If an investigation is needed, this period can extend to 90 days. And in case of delay, the insurer must pay interest on the claim amount 2% above the bank rate from receiving date of documents until the date of payment. So choose smart, stay protected. That's our insurance mantra.